Welcome back to the Wake Man channel. Alright, so as you can see, I'm wearing one of my new hats and one of my new shirts. This is the 5-panel hat on my website. I never really worn a 5-panel hat, so I wanted to try one out. I got the navy one. There's a few different color options out there. And my wife hates it, so apparently this is just not the style for me. So I don't know if I'm going to continue wearing this hat. It might be something I offer for an upcoming giveaway, but I do think it's pretty cool. The logo came out pretty nice, so I like how that worked out. I'm also wearing one of my new t-shirts, and this is my favorite t-shirt so far, based on how it fits and also how the logo came out. This is just the men's fitted premium t-shirt on the website. So if you're interested in supporting the channel, make sure to visit wakemann.com. There's all kinds of merchandise options out there for you to choose from. All right, switch back to my normal hat. I do have several other hat options on the website, and I'm gonna be getting some of those and trying them out. I do think I'll like a few of them. Just not sure the 5-panel hat fits me. For those of you who watched my last video about mounting my wheel chocks to my boat trailer, I did pick up a piece of composite material from Amazon. So this is just some black plastic, really hard, dense stuff, actually pretty heavy. So I'm just gonna cut this up and put this in there instead of my impeller. So I'll put a link to that video in case there's anybody watching this video that's interested in that. So today's video is going to be the 16th edition to the Wakeboat ownership series. So the third episode of my Wakeboat ownership series was a video where I explained how you can own a $100,000 wakeboat for $600 a month. And a lot of that video covered how it's possible with financing. And since then I've had several comments. In one of the comments, somebody asked me if I could expand on the financing piece of it. And I thought that was a great idea, especially since that video has become my most popular video up to this point. So it's obvious that the information that I've provided in that video has been helpful. So I want to go ahead and expand on that. And this video is going to cover some points that should help you with any type of loan, not just a wakeboat loan. So this video is just going to really cover some points on financing in general. So I'm going to go ahead and tell you the main points I'm going to cover right now and kind of get into the detail of those. So really what I'm going to dig into is showing you how you should do what's best for your situation. And in order to do that, you need to fully know and understand your situation when it comes to financing, whether it be for a wakeboat, a mortgage, or a car loan, whatever it may be. I'm going to compare financing a wakeboat to financing a mortgage because there are a lot of similar requirements when you're applying for those types of loans, depending on the amounts you're applying for. And in this scenario, again, I am looking at $100,000 wakeboat, maybe even more. So to start out with, I'm going to put a link right above me to the video that I was just referring to, where I describe some of that financing, because I am going to be making references to that video, and obviously some of the detail I provided in that video, I'm not going to redo it in this video. I'll just have you refer back to that video. I talked about knowing your situation so that you could do what's best for your situation. I'm going to go through a list of items that are very typical for a bank or a lender to request of you when you are applying for a loan, and how you can know those things before you even go to your lender so you can be best prepared to get that loan if you're looking to finance something. The very first thing is your debt to income ratio. A debt to income ratio is very simply put, it is how much debt you have compared to how much income you have. And most lenders are going to be looking for you to be 40% or lower when it comes to a big loan for a mortgage or for an expensive wakeboat. When you're buying a vehicle, a lot of times they'll let you get away with up to 50% debt to income. And all that means is they're going to take all your monthly payments, so your mortgage, your credit card payments, your car payments, anything that would typically be reported on your credit, which we'll get into here in a second. And they're going to take that total, the monthly total, and divide it by your monthly income total. That gives you your debt to income ratio. And they want you to keep that 40 to 50% debt to income ratio while adding the new loan payment. So they're going to take your mortgage / rent payment, your credit card payments, your car payments, anything that's going to be considered debt. And then they're going to add on what you're considering for your new loan payment. So let's say your new loan payment's going to be $400 a month. They're going to add that on top, then take that debt total and divide it by your income total, and that gives you your debt to income ratio. And in any type of scenario where when you're going in to ask for a loan, they're going to calculate your debt to income ratio. And again, they want that to be typically 40% or below, or somewhere between 40 and 50% if it's for a car loan, for example. For those of you who just have a normal job, a normal 8 to 5 job or something to that effect, they're just going to want to see your last 2 pay stubs typically. For those of you who have other sources of income, own businesses, have rental income, any other sources of income, they're going to want to see your last 2 years tax returns. One of the problems I've run into and I've learned from over the years is I own a duplex. I used to live in one side of it and rent out the other side for many years. Now I rent out both sides, and I can find lots of things that I can write off against that income so that I'm not paying more taxes than I need to. But you have to watch out because, in that situation, whether it's a business or a rental property, you don't want to make it look like you're losing money year over year. If obviously you want to write off what you can so you're not paying taxes in. But if you're looking to finance an expensive boat or a new house, they're going to want to look at your last 2 years tax returns. And if it shows that you're losing money, that's going to count against your debt to income ratio. So keep those things in mind. The next thing that is best to know is your credit score. In my video I've been referencing where I talk about financing, I tell you that you can use creditkarma.com. It's a free application, and it gives you a way to keep tabs on your credit score. And your credit score is basically a way for lenders to go out and look to see how well you've repaid your loans or are repaying your loans. If you missed payments, or if you stop paying on a loan, or if you're not making medical payments, things like that are going to lower your credit score. That can either be a reason for them to decline your application or give you a worse interest rate. So your credit score is going to determine your interest rate in most cases. And again, if you want to see a breakdown of that or an example of that, I'll refer you back to episode 3 of the Wakeboat Ownership Series. A lot of times banks will ask you about other assets. So if you have a 401k, if you have savings accounts, different things like that. The reason why they're asking about those things is because it can help a bank feel good about lending to you because they know that there are other assets that you might be able to cash in on if something goes bad. I would just look at that as it's a helpful way to get you into the loan, but they're not looking to dig into that or typically put collateral against that. If you have a scenario where you're trying to get a loan and there is no collateral, for example, you're not buying a house, you're not buying a boat, you're not buying a car, you just want a loan just because you need the cash for something, then that's where they'll look for some sort of asset of yours to put up for collateral. But in the scenario I'm describing, typically they wouldn't need to put down your other assets as collateral. So a few of the other factors that are very common when going in to apply for a loan that the bank's going to want to know is, for example, how long have you been working for the company you've been working for? Anything 5 years plus, so if you've been working for a company for 5 years or more, that's basically as much as they care about. So that's going to get you potentially a better rate, or make sure that you don't get declined because of that. If it's less than 5 years, it doesn't mean you'll get declined. It doesn't necessarily mean you'll get a lower rate. It just means that it's one of those factors that could possibly work against you, and could possibly give you a lower rate. So it is best if you've been working at one place for quite some time. That does help you get a loan easier. If you own a business, they would just look at it in a similar fashion. How long have you been running that business? And has it been making money year over year? They're going to be able to see that with your tax returns. So how many years on the job or how many years running your business are likely going to be a factor when you're trying to get a large loan. Another factor that's going to determine what rate you get and what terms you get typically is going to be whether or not you're purchasing something that's new or something that's used. Now, if we're talking about a house, usually that doesn't matter. New or used doesn't matter because typically homes appreciate. And sometimes they don't, sometimes they depreciate, but for the most part they appreciate. So lenders do care about the condition of the house, and there's more things that go into getting approved for a house there. They want to see that the inspection is good, for example. But when we're talking about boats or cars, whether or not the boat or car is new or used is going to determine the length of time that they will loan you money and your rate. And just to give you an example, I have commonly seen where if you're buying a brand new boat, you can finance your boat up to 20 years, which makes your payment super low. Depending on all those other factors, you might get a great rate. Let's say your rate is going to be 5%. If the vehicle or the boat is used, and let's say it's 5 years old at this point in time, that may make it to where they'll only lend up to 15 years for you. And the rate, it may be the same, it might be a little more, it might be 5.5%. So that makes it to where if you compare a 5-year-old wake boat that's basically the same make and model to a brand new wake boat, where you've got the used one, you have a 15-year loan and 5.5%, and the new one you have a 20-year loan and 5%, it may make that brand new one look a little bit better as far as buying. So those are things to consider. Whether or not you're doing new or used is going to affect your loan depending on what you're financing. If it's some sort of vehicle, typically it's going to affect your terms and or rate. Now, those are the main factors that a lender is going to look at when you go in to apply for a loan. There are several other things that can pop up depending on the lender that are not as significant. An example might be renting history. If you're looking to get a new mortgage and all you've done is rent so far, then they might want to talk to your landlord and see how well you've paid over the years. Things like that. There could be several other factors similar to that that your lender will ask for. But knowing those 4 main points, understanding where you're at with all of those factors is going to help you know your situation. And if you know your situation, you're going to know better how to do what's best for you. And what I mean by that is many times I've heard people say that you should not buy a toy with a loan. I cannot directly disagree with that because I believe it depends on your situation. I definitely don't think you should be going and buying toys on a loan if it's overextending you. And what I mean by overextending you is if you're pushing your debt to income ratio to 56% by going and buying this new toy, then I think that would probably not be a great idea. Maybe you're doing that because somebody else is paying for part of the payment. You know, there are scenarios out there where a couple friends go and buy a boat together. The first boat I started hanging out on a lot, that was this scenario. 2 friends bought a boat together. So maybe you're doing it because of that. So obviously it just depends on your situation. I think financing things and having loans can definitely hurt you if it's mismanaged. But if you're staying on top of it, then I think loans are great. Loans are what allow me to accomplish way more than I could have during my time on this earth than if I did not have loans. And again, I want to come back to knowing your situation so that you can do best for your situation. And by knowing your situation, you can make sure that if one of these factors is slacking, that you're working towards making it better, or you at least know going into the lender's office that you're not going to have a huge disappointment because there was something you weren't aware of. You know, every time I've gone into a lender's office and been denied, it's never a great feeling. Whether I know it's right or wrong, you know, there's been times where I've been denied by one lender, went straight to another lender and was immediately approved. It's never great to be denied. So the more prepared you are, the better it's going to be for you. So again, just going to reiterate, do what's best for your situation and know your situation. So that's it for this video. I hope this video helped you. I am going to go ahead and do a giveaway of this hat. So for those of you who have watched this video all the way to the end, all you need to do is comment below and tell me your Instagram username, and that's how I'll contact the winner. And I'm going to draw the winner for this giveaway 2 weeks from today. So thank you for watching. If you enjoyed this video, please give it a thumbs up. If you have any thoughts on this video or ideas for future videos, please leave them in the comments below. And if you are new to the channel, please subscribe and hit that notifications bell so you'll be notified of my future videos. I'll see you next week.